Hey traders, this is Christian from Tribeca Trade Group, and this is your end of day market recap for September 29th. We've got one more day to go for September, one more trading day to go. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Everything that we're going over is education purposes only. So we'll talk about today's price action in just a second, but yes, I think with one day left to go, and it should be an interesting day considering it's quarter end as well as month end. So we'll see if we get more volatility tomorrow. We also have this PCE deflator number that's coming out as well tomorrow. So another gauge of inflation, right? So this is the month over month and year over year, just like we get for the CPI and the PPI number. So that's tomorrow. We'll see if that we could talk a little bit about inflation before we talk about today's price action, but because that is a big driver of what's going on right now. Germany had their number today, and their CPI number actually came in higher than expected. I think they were expecting like 1.1 and they got a plus 1.6. So inflation's not going down in Europe, and you have to wonder, how much if it's gone down in the US, is it a lot different than Europe, right? Is it a big move down, right? And I find this interesting. This was Carl over at CNBC tweeted this out. The difference, whoops, this is the wrong thing. I was looking at prices. Let's pause this for 1 second. All right, there we go. I found it. I had the wrong sheet up. This is what I was looking for. I make mistakes every once in a while, but it's interesting. Now, I don't know, maybe they're not measuring any of these things in the inflation reports, but things have come down. And now, again, this is cherry picking a little bit. These are some products, from the ultimate highs of this year and how far they've come down. So, right. And we just saw Nike come out with a report, clearly, they've got some higher than normal inventory levels. So, I don't know, perhaps it's a process and it's not going to, we're not going to see these numbers adjust right away because some of the other numbers that we know and we talk about in some of these end of day videos, such as rents, such as employment, we got another employment number today. Going back to the economics, right? The initial jobless numbers that came out. So this is a weekly number that comes out, but we're not seeing any pickup in terms of claims that are going up. So some things the price of avocados are going down. That's great. Guac is cheaper, but all of that data, considering that a lot of the CPI report, the PCE deflator is probably going to have jobs and wages and so forth. And we've talked about that in a couple previous videos, that's a lot stickier. So again, the reason why I'm going into a little bit of going into detail here is because we do get a PCE deflator number tomorrow. So again, another gauge of inflation, and we'll see if that moves the needle. We've heard from various different Fed speakers. They are being very clear with their message. Now, I have my opinions about them. You probably have your opinions about them, but it is what it is, right? And that's what I'm probably going to focus the remaining portion of the video on is, hey, we just basically have to control what we can control, right? The Fed speakers right now are talking about, hey, they want to get this inflation number down at all costs, right? That is something that we heard just about a little over a week ago at this point with the Fed meeting, right? Where Chairman Powell mentioned in his speech that they're going to inflict more pain to get the inflation number down. So that's why I stress this number, and we'll see where it comes out tomorrow. Let's get to the price action for the day. All right. So, by the way, if you look at the numbers for the month, and I will go over my P&L numbers tomorrow, as I always do at the end of the month, and we have one more trading day to go. But right now, the S&P is down 8%. The Qs are down 9%. Small caps are down 9% as well. I mean, so that's a nasty month. And anytime that so yesterday, right, we know that we got pretty oversold. Right? I think that on the bonds, the RSI on the 30-year bonds was about a 22, and the S&P and the NASDAQ, I think, were in the high 20s. So what comes after, when markets are that oversold in the short term, a pretty decent bounce could come. which we did, and that basically burned off those oversold levels. I apologize if I said overbought, but oversold levels. So that did take place, and now that those oversold levels have been bought out, have been burned off, excuse me, we resumed going down. Okay, so a couple of things that I thought were interesting. Remember, I went over this in yesterday's video. We did hit resistance in NASDAQ. I'll go back to the S&P in just a second, but here you go. We hit this. We bounced right into resistance, right? And again, this is using volume at price. As I say in just about every one of these videos, that this value area is. This value area on the 1 hour chart is for just this week, so it's short term, and it's based on last week's volume at price, and it gives you really good resistance levels, right? So it knows where there's overhead supply, which is a big thing right now, right? Because we're so far down at this point that you really need powerful buying to overcome that overhead supply, meaning people were long up here. Once you kind of get into here, people are going to be selling, right, to try to basically get back to even. And a lot of people take that as an opportunity to say, hey, I was wrong in here. We get back into these levels and I'm a seller. So that's why overhead supply is so important. Notice where we are, by the way, for NASDAQ, and we'll talk about this in the S&P, but we're right around the lows. To me, it doesn't really make that much difference if we break the lows or not. We're already seeing a lot of sectors and a lot of areas of the market break the lows. We know that the breadth has been, besides yesterday, has been more or less this. It's just been atrocious over the last few weeks, and you could look at the advanced decline lines, and you could see that for yourself in terms of how bad the breadth is. By the way, this is something that we detailed in the weekend video for members, right? We talked about how the advanced decline line, and I can bring them up really quickly. Advanced decline line, we'll do this for NYSE first, but this already broke through those lows, right? And we can bring this out to a 5-year chart too, so that you could see it in a little bit more perspective. But when you look at the overall advanced decline line, right, that already broke through the June lows. So to me, it's like, okay, some of the bigger companies, like an Apple, for example, and we'll talk about Apple in just a second, but the damage is already done. In terms of that. And here's what it looks like for NASDAQ stocks, which is going to look even worse. So this is the advanced decline line for NASDAQ. Again, those June lows, we're seeing more names that are declining and have broken through their June lows than holding up. So we don't have good breadth in the market. So that's why it doesn't matter that much to me in terms of if we break the lows, because there's been so many stocks that have already done it. So notice where we are. We did bounce on the lows at the end of the day today. I don't know if that means anything. One of the things that we've talked about is, selling into strength, right? We know that we're in a bear market. We're in a, like, overall for the indices, right? They are in downtrends. I need to see, ultimately, and we kind of start with the 5-day moving average as a first step, but we know that, it doesn't matter which we look at. I'll bring it back to the S&P here, but we know that we're in a pattern right now of making lower highs, right? We got out of this for a little bit in August, right? We got over this last peak in here, and that's why sometimes markets are difficult, because you're like, hey, this is something. We got over the previous highs, right? You get a little bit excited about that. Now, of course, we stalled right at the 200-day moving average. That's why I have it on my chart. Some people don't like moving averages. It's a good example of why I do, because everybody's looking at something like a 200-day moving average. Who drives the markets? The institutions look at the market. Do you know the 3 moving averages that are pre-populated on any institutional trader's Bloomberg, right? And I'll show you, for example, we'll bring up a chart, but a lot of traders who are, a lot of hedge funds, for example, right? They're not technicians. So they look at an S&P chart, right, SPY, and they look at these 3 moving averages, because that's what is pre-populated on every Bloomberg terminal, right? The 50, the 100, and the 200. So of course I'm going to watch the 200-day moving average, because people are making decisions based on that. Okay, that's why it's important, right? And wouldn't you want to know So again, so I'm going off the rails here a little bit, but I get this all the time. Oh, I don't need the moving averages on my charts. Well, don't you know where we could possibly stop in terms of a trend? I don't know. Maybe you don't care about that. Um, so I'll get back on track here for a second, but after that, notice what we've done. So when we zoom in here, right now we're back in this pattern, lower high, right? And we haven't even come back and tested. So even if we have a more meaningful bounce than what we had yesterday, right, we still have to get over this hump of the pattern of the lower high. So it's a work in progress, and it is a process, right? That is something that we're going to have to do, just like we did this back in here, if we start to move back up. Right, that's the one alternative. Of course, another alternative, and we could begin to kind of glance our eyes down here to see what is the next level if the indices do break these lows, which they're teetering on. Right, and if we can't get off these lows, then you can kind of figure it out for yourself that we're probably going to continue with the direction of the prevailing trend, which is lower. All right, so 3556 is one level, 3442. Again, this is based on volume at price. These are what's called as virgin point of controls. There's where a lot of volume was that we have seen previously, but we have not gone down and revisited. Right, and let's go ahead and look at the weekly chart as well, right? So we've got some support here, but this didn't really work last time when we had a huge selling pressure. And if we break this, right, then, which is the 200 period moving average on here, then this VPOC 3324 could be something that you want to keep in the back of your mind, right? So why are we going through some of these levels down here? So that you could be prepared a little bit with your decision making, and being understanding that these rallies right now, continue to be bear market rallies until proven otherwise. So let me get out of this. We'll talk a little bit. I always will go through what I traded. Right? I think, if you're a newer viewer into into my videos, I don't just talk about, okay, the technicals, and this is what I would do here hypothetically, and this is what I would do here hypothetically. No, I show you the actual trades, right? Because in theory, we're trying to follow a game plan. But if you go back to what I did yesterday, right? I had like 3 new trades on. I was long XBI. I was long TNA, which is the leverage IWM. Notice what I did at the end of the day yesterday, right? Right, and even tried doing like some First Solar trades. The majority of what I did was day trades. I just don't trust this market right now because we're so far in a downtrend, right? So I sold these things, and I sold them a little bit earlier in the day because I'm very cognizant about this market. So why is this important? Right? Because being a risk manager is the #1 priority, especially when you're in an environment that you are right now. Right? I've said it before, and I'm excited that we're getting through September, because I even started talking about September before we got into September, that this was going to be had the chance to be a very poor month, right? Because that's what the seasonality is. Now we're also in the weakest week of the year, right? We're in between the two Jewish holidays, Rosh Hashanah and Yom Kippur. If you've been around trading, or if you've been on a trading floor, you always hear that phrase, right? You buy one and you sell the other, or you sell Rosh Hashanah. Even though I'm not Jewish, I know how it works. You sell Rosh Hashanah and you buy Yom Kippur. That's generally the seasonality trade. So we don't know if that's going to live up to historical means, but we'll see once we get till next week. Now, does that mean I'm going to just start buying? Right? On some of these shows, CNBC or Bloomberg, they ask, okay, what are you doing today? I'm not doing much. That's why I took off risk yesterday, and did a lot of day trading today. All right, because that's right now what this market is right now. And so it's very difficult to add risk with the VIX above 30. Okay, so that means that there is heightened volatility. So it's good to have these barometers of risk and knowing where you're at, and just being patient, right, until you get better opportunities. So yes, once we get into October, what I would like to see is first us retake the 5-period moving average, and then maybe challenge the 20-day moving average. And then also, this is what we're going to be going over as we start October. We want to see that participation. We want to see buyers come back into this market, not this lousy breath that we're seeing every day. Okay, well, we could talk a little bit about that. I did some shorting today because I just figured that the breadth was so poor this morning that you know, things like, you know, my trade that I've got a couple names that I like to short. One is Meta because the you know, it broke this channel, and I ultimately think that Meta is going to 117. And we're on the way to 117. You know, I did a lot of shorting in here. I covered it, my short around I think before FOMC. And today, you know, I noticed yesterday that it had a bounce, and I wanted to sell that bounce, and it wasn't down that much. So I started doing that. I didn't get my target. I was looking for 134 for the day. We got close to it, and you know, you could see how I traded this. You know, there's a couple of times where I said, okay, I'm going to take some profits here. I sold it at 138, right? And I bailed on it once, and then I kind of got back involved in it again. So I did a lot of day trading today because I just thought that there was a few opportunities. I also tried Caterpillar too, but that one didn't work because I established that today, and I just decided to take it off. By the way, there was some deer put buying today too, so that might be something to kind of look at if we do get a little bit more of a bounce. But it kind of looks the same, right? You had the bounce up to here, and if we get a weak tape tomorrow, and you know, the inflation report is hot, right, this will probably be something that I'll be looking to short tomorrow, is deer. All right, so it's good to have that plan, something that we try to do every morning. Tribeca Trade Group. Another thing that we'll talk a little bit about Apple. Okay, Apple finally broke, right? They finally got Apple to fall. People have been talking about the valuation in Apple. You know, they had a report out yesterday that the iPhone sales, the demand might be less. So, you know, people have been saying and trying to knock this thing down. I don't have any position in Apple. I've just been watching it. It held in there yesterday. If we go to the 1 hour chart, but congratulations, the shorts got it. Again, I don't care. I don't have a position in it, but 145.65 was where it held, and it held there in the beginning of the day. And then once it broke, once you lose this volume, this virgin point of control, then it can come undone pretty quickly. Now we've got another VPOC down here at 137. I wouldn't be surprised if that gets taken out, but right, this is one of those names that people have been going after because they're like, hey, it's been holding up so well in a bad market. So you know, it may be actually a good thing that this thing comes down, and it's not one of those names that's kind of left. All right. What else did I want to go over with you guys? But yes, the FANG stocks, and I talked about Meta, but you know, I get questions constantly on these stocks, and someone mentioned to me on Twitter, so like, hey, how come you don't mention that in your videos? So I'm going to mention it. Regarding that, I haven't been trading this group for a while because why? They're in downtrends, right? These are the weakest, you know, these names have been acting extremely weak. Forget about the name, forget about the brand, right? But even like Google, which I thought had good earnings, it doesn't matter. It broke this channel too, right? So we talked about before with the indices, how, in my opinion, it doesn't matter that much if they take out the lows because there's been so many companies that have already done it. All right, so that's enough, I think, for today, except for one other point that I'll make. You know, one thing that I found interesting today, let's see if I can find this for you guys. I think I had it up earlier, but I must have closed the window. But where is it? CarMax. Okay, so the other thing that's going to make things complicated, okay, is we're going to have earnings season start. And you know, we had Nike report after the hours, we had Micron report. I don't think Micron went down that much. Perhaps the bad news is priced in because the numbers were really bad. The guidance was horrible for Micron. But notice that I don't think it's not really moving too much. So perhaps, you know, and it is a lower valuation company, but perhaps the bad news is already somewhat priced in. Now, you look at CarMax from this morning. The bad news was not priced in for this name, right? So this thing fell 24% and brought a lot of names down with it. So this is a case where the bad news was not priced into the stock. You're going to probably see a little bit of both of these things. Some names that have really gotten hit pretty hard, probably some of their bad earnings is already priced in. Remember, stocks are forward looking, right? So a lot of the adjustments that you're seeing, for example, a Google, right, which has gone down from the last time it reported earnings, possibly part of their next earnings, which is probably not going to be good, is already priced into the stock. Microsoft, why do you think Microsoft is going down like this? Well, probably at this point a month ago, they talked about that they're going to have to take a write-off because of currency exposure. What has currencies done since then? Right, the dollar's gotten stronger, so the price of Microsoft has been being adjusted down, probably for that fact that they're going to at some point come out again and mention that they've got more pain because of the currency move since the last time that they talked about it. All right, so some of these stocks are reflecting the bad news. We just won't really know how much is already priced in until you get to earnings. So be mindful of that. We'll talk more about that as we get more earnings reports that are going to come out, but keep that in mind. Keep the path, you have to look at the path of the stock to understand that there may be some of the bad news being priced in. Because like I said, Micron, the guidance that they really brought down their guidance a lot. And the stock's not down because perhaps some of that is already built into the stock price. That is what you want to see, by the way, right? You want to see when a company reports really bad numbers, bad information, that the stock actually may go up on that, right? That means that the bad news is priced into the stock. So we're going to get a ton more examples as we go along. Please do me a favor. Please like this video, subscribe to my channel. That helps with what I'm doing, and I appreciate that. We've been, clearly we've done a lot of work this week where I talked about bonds for a whole session, right? So I'm not going to talk about bonds too much in this, but I really try to bring new subjects in here. Another thing to talk about too, sorry I'm all over the place in this video, but I like to tell you guys what is going on in terms of bad things that we may be seeing in the market, right? Here's something that is beginning to change, or that has changed. Look at what CDS prices are doing at this point, right? So there's starting to be more risk being priced into this market. Spreads are getting wider. I don't have the European ones up, but they're really, as they say, spreads are blowing out, right? There's more risk that is being priced into this market at this point. So we're dealing with a very complicated market right now where the Fed is continuing to say that they need to bring down inflation at all costs, right? Which was very different than what Mario Draghi said in years past, right? They want to get inflation down no matter what. So we've got a lot of headwinds for now. We'll take each day as it comes and do our analysis and be ready for when things change. All right, guys, have a great night. Thank you very much, and I'll see you tomorrow.